Good morning. Broadcast number 1, April 15th, 8:30. A short discussion about a few things going on and also the Chesapeake Energy reverse stock split. Let's see. Let's get a share screen going. Wait a minute. Just as a general note, I'm not an investment advisor. I hold no certifications. Let's share screen, application window, Chrome tab, Chesapeake Energy. All right, so to review, last week Chesapeake Energy announced that they were going to do a reverse stock split, 1 for 200. A few days ago, they were trading around 13 cents a share or so, actually a little higher, like around 18 cents. But as the stock's been sliding because it looks like the company's heading into bankruptcy, they announced they were going to do a reverse split of 200 for 1. Basically, they were given a delisting notice by the New York Stock Exchange, so they decided to in order to keep the price above $1 a share so that they could continue trading, they would do a reverse stock split. So as of this morning, anybody that holds less than 200 shares have been paid out because they're not going to have fractional shares. Anyone that has 200 or more, they've done a reversal. So, for example, if you hold 1,000 shares with the 200 reverse, you now hold 5. Any fractional shares, so for example, if you have 1,100 shares pre-reverse split, you get 5 shares, plus they would pay you out for the other 100. So pre-market, as you can see, although it's probably going to be volatile for the first hour trading in about 55 minutes as it sort of like hunts around or finds its price. Looks like it's going to be around $20 a share. So basically, within the last few days, effectively pre-split, stock's fallen from about 18 cents a share down to about 10 cents a share. But it may jump around in the first hour as it normally does. Normally, most people expect when something like that happens that the stock usually starts dropping because of the psychology of even though it shouldn't matter if you hold like 1,000 shares at 10 or 5 shares at 20. Whereas people would immediately dump a higher priced stock, they would sometimes hold on to a lower price because they figure it doesn't really matter. And I guess there's some announcements that they've done some restructure hiring. Well, I guess a mutual fund company hired somebody. Well, they talk about taking steps to prepare. Translation is hired a lawyer. So in about an hour, we'll see what happens. Potentially, people might look at shorting it, but usually the rebate rate is so high on borrowing shares the short, if you can even find any, that it just wouldn't be worth it. The other possibility is once the options readjust, you can see about those. But again, the premium may be so high that it may not be worth it. The only thing positive to say is that probably most people shouldn't buy it because basically, well, if you take a look at the maximum chart, over time it's just a long downhill slide. And now that it's by doing the reverse split, the price is back up, it can continue that long slide. So that's all for now. Bye.